Hey, what's up, my friend? So in today's episode, right, I want to share with you the 5 things that you should stop doing as a trader. Number 1, stop following someone else's opinions, analysis, chart trading setups, whatsoever. Stop it, right? It doesn't matter whether that person is a, multi-millionaire trader, whether that person drives a Lamborghini, whether that person has a huge following. Stop following their opinion, their analysis. Why is that? And the reason is simple. It's because you do not know what their trading plan is, right? You can be sure that they're not going to tell you, hey, Rayner, it's time to sell this position that, I called long 2 weeks ago. No, they're not going to say that to you. They will not tell you how to manage the trade. You don't even know what their trading plan is. You don't even know what's their historical win rate of that strategy. You know nothing about it, just except, right, that chart they just shared with you based on some, maybe moving averages, support resistance, etc. You know nothing else besides that. So this is why you don't want to use their opinion, use their analysis, right, to make, or rather to be the basis of your buying and selling decision. Never rely on third-party sources, okay? It's all on you. You are on your own. Number 2, if you're new to trading, right, then stop hopping from one trading strategy to the next, right? There is no, like a holy grail out there where there's a best trading strategy that wins 90% of the time. You get a minimum of a 1 to 5 risk-reward ratio. Doesn't exist. So stop hopping from one trading strategy to the next, right? Especially if you're new to trading, right? Instead, focus on one trading methodology. Could be systematic trading, could be swing trading, could be price action trading. I do not know what suits you, right? And dive deep into that methodology, right? Learn all you can about it, right? Trading setups, right? The why behind why a trading strategy works. How to manage your trades, developing a trading plan around it. That is what matters. Okay, so stop, hopping from one trading strategy to the next, right? Especially if you're new to trading. The third thing, if you're an experienced trader, right, stop tweaking, right, that one same trading strategy that you have been using for the last, 3 or 4 years, right? Instead, go out there and develop new trading strategies. Now, some of you might be thinking, hey, Rayner, isn't your suggestion kind of, contradicting? One instance you say to focus on one strategy, the next instance, to develop multiple strategies. What's going on, Rayner? Right, I'll explain to you where I'm coming from later, right? But for now, right, if you're an experienced trader, stop, right, tweaking that one trading strategy, that bread and butter trading strategy that you have. Because here's the thing, no matter how much you tweak, right, there's only so much upside or so much better that trading strategy can get. It's not going to be like, for example, if you have a trend following strategy, I can bet with you, right, that trend following strategy, no matter how you tweak, right, it will still lose money in a range market condition. So no matter how you tweak that strategy, there is only certain amount of potential left in it. So instead of wasting so much energy onto that one strategy, trying to tweak it, find the best parameters, the best settings, which probably doesn't exist, what you want to do is go out there and explore other different trading strategies, other different strategies which are uncorrelated to what you're trading right now. So for example, if you have a trend following strategy for the forex and futures markets, then go and develop a trading strategy for the stock markets. Maybe a mean reversion trading strategy for the stock markets, or maybe a momentum trading strategy for the stock markets. Something that's uncorrelated to what you have right now. Because when you bring these two uncorrelated strategies together, you will greatly improve, right, your overall portfolio, your overall equity curve. That's how it's done, right? Don't waste all your time and energy on that one strategy, trying to squeeze every ounce of juice out of it, because the effort is really not worth, right, the so-called potential upside that's left. Okay, and the fourth thing that I want to bring to you is this, right? Don't think in terms of absolute, right? And this kind of drives home the point that I mentioned earlier, right, where I said, if you're new to trading, focus on one strategy. Then the next thing I said, right, if you're an experienced trader, develop multiple trading strategies. So the key thing here is that there is nothing absolute in trading. The context matters. So what I said earlier, right, it's all depending on the context, right? If you're new to trading, you're a greenhorn, you have 6 months experience, then hey, focus all your time, on that one strategy. But if you have someone with 5 years, 10 years trading experience, right, profitable with your trading strategy for the last few years, then go out there and explore multiple trading strategies. So the context matters, right? And that's the point that I want to drive home to you, right? As a trader, right, don't think in terms of absolute, right? Absolute will get you nowhere, because if you think in terms of absolute, right, then really you're just closing your mind, right, to the possibilities out there. So always think in terms of the context, right? Understand the why behind it, and that's how you progress as a trader. And the fifth and final thing that I have for you is stop comparing yourself to other traders, especially with social media. You see traders posting their P&L, you feel lousy about yourself. You wonder how this trader always make money every single day, every single week. It's always green. The screenshots are always so beautiful. Now here's the thing: you might be on a demo account for all you know, right? Second thing, it might be a trading strategy with a small target profit and a very wide stop loss, right? And here's the thing, right? You never know what are the goals of other traders. You never know how much experience they have. You never know what is their skill set. You never know how much capital that they are trading with. So don't compare yourself to them, because you will make yourself feel lousy, right? You'll make yourself, feel inadequate, right? And when you're lousy, when you feel inadequate, right, how much better do you think your trading results will get? Unlikely, you probably get worse, right? So stop comparing yourself to other traders. If you want to compare yourself to where you were 1 year ago, 2 years ago, and see how much you have progressed. That's how you want to make comparison, not to someone else, right? With different capabilities, different tools, different experience, different resources at their hands. Okay, so as a quick recap, right, here's what we've discussed today. Number 1, stop relying on other traders' opinions, analysis, or whatsoever. Number 2, if you're new to trading, stop strategy hopping. Number 3, if you're an experienced trader, all right, start developing multiple uncorrelated trading strategies. Number 4, don't think in terms of absolute. Okay, always think in terms of the context that is presented to you. And number 5, don't compare yourself to other traders. So with that said, I wish you good luck and good trading. I will talk to you soon.